All right, folks, we have an amazing moment right now. We have one of those moments where the United States government accidentally did something smart. This is amazingly bullish news for Bitcoin. The CFTC has officially approved the first ever federally regulated spot crypto trading in American history. This is the regulatory equivalent of the United States finally looking at Bitcoin after 16 years and saying, okay, fine, you can sit at the adult table. For years, we've had a ridiculous split in the system. Futures trading, totally allowed. Derivatives, yeah, sure, go wild. But spot Bitcoin? Oh no, that's too scary for America. Please go to some offshore island run by 3 dudes in flip-flops. And now for the first time, actual spot Bitcoin trading is moving into a real, regulated US market structure with compliance, oversight, transparency, the entire package. And this is huge for one simple reason: the institutions, they trust regulated rails. They don't trust whatever exchange is headquartered on a beach somewhere where the customer support team is consisting of one guy named Pablo who replies twice a week. Institutions, they trust federal frameworks. They trust the CFTC, and now Bitcoin is officially inside of that world. This is the moment that has turned every single chief investment officer out there who have been waiting for regulatory clarity into someone who suddenly realizes that they are behind. Bitcoin just became fully compatible with the US financial system, which means that every major allocator now has to start paying attention. If you were wondering what it looks like when a country finally wakes up and decides to participate in the future, well, this is it. And here is the real impact of this regulatory shift. Bitcoin just graduated from the category of interesting technology experiment into approved asset class that institutions can finally touch without getting yelled at by their compliance department. For years, every single big capital allocator out there has given the exact same excuse. We are interested, but there's no federally regulated framework. This became the Wall Street version of my dog ate my homework. Convenient, but everyone knew that the moment the rules were clear, the capital would follow fast, and now that rule is gone. Bitcoin lives inside of a US regulatory structure that looks familiar to pension funds, endowments, insurance companies, and all of those groups, those 4 groups I just mentioned. They don't chase hype, okay? They need predictable rules. They need oversight. They need a market architecture where their lawyers can sleep at night, and now they have it. This type of development obviously changes the scale of demand for Bitcoin as an asset, because retail speculation is one thing, but institutional allocation is something else entirely. When large institutions allocate even a small percentage of their portfolios to Bitcoin, the inflows to Bitcoin, they can dwarf everything that we've seen so far. And Bitcoin is entering the arena where this serious capital lives. The people who manage trillions upon trillions of dollars, they finally have a clear path to participate in Bitcoin. This will create a new competitive pressure because no fund manager wants to explain why they missed the one asset that keeps outperforming everything on Earth. And this is the kind of structural shift that sets up multi-year bull markets because it expands the buyer base from the traders to entire financial systems. We see Texas buying Bitcoin. We see JP Morgan allowing Bitcoin as collateral. We see all of these developments. The new chairman of the Federal Reserve will likely be a former Coinbase advisor. We have a pro-Bitcoin president. The president's media company has $1 billion worth of Bitcoin. The president's sons have a Bitcoin mining company. We have a pro-Bitcoin SEC chairman. We have a pro-Bitcoin treasury secretary, a pro-Bitcoin commerce secretary. What else do you need to see here? It is very obvious to anybody who's paying attention what is happening right now. Now let's talk about the geopolitical angle, because this part is unbelievable. Because for a decade, remember, the United States treated crypto and Bitcoin like some weird hobby that would eventually go away. Now, us here at Swan, we believe that Bitcoin is the apex asset, and crypto kind of still sounds like a dirty word to me, not gonna lie. But regardless, every single offshore jurisdiction on Earth has said, sure, bring your exchanges here. We've got palm trees and zero rules, and guess what happened? The entire industry in crypto, it grew up somewhere else. This CFTC decision is really the first real sign that the US decided that it wants back in. Yes, we had the strategic Bitcoin reserve, but not a lot of news has come out since that was announced. But this messaging is really crystal clear to me. Washington wants America to lead the digital asset markets instead of watching innovation migrate overseas. Bringing regulated spot Bitcoin trading into the US exchanges is a very strategic move because it pulls liquidity, it pulls companies, and it pulls talent back onto American soil. And the important rule to remember is that capital follows regulation, and America is now turning the lights on for Bitcoin. And that is how financial dominance works, because if the biggest economy in the world signals that Bitcoin trading belongs inside of its regulatory perimeter, well, the global markets are going to have to take that seriously. The companies that might have been hesitant about building in the United States now have a reason to reconsider, and investors who preferred offshore venues, now they get a safer, more compliant alternative at home. The United States is very clearly positioning itself at the center of gravity for Bitcoin markets. And when you look at the even bigger picture, people, think about this. Every single major financial innovation of the last century, it has flowed through American institutions. And Bitcoin is about to join that pattern. And when it does, the scale is going to become enormous. This is the moment where the US stops watching the frontier from a distance and starts building on it. Now, I did mention that all of the big money has been sitting on the sidelines with a checklist, and at the top of that checklist has been regulatory clarity, but now that box is checked. So let's think about what this means. Pension funds with thousands of employees depending on them can actually consider exposure to spot Bitcoin. Think about the university endowments out there, okay? We know that Harvard owns so much of IBIT, BlackRock's Bitcoin ETF, but now all of the university endowments that want to invest in spot Bitcoin, well, now they finally have cover to act like they can be innovative. Insurance companies, which move slow enough to qualify as geological formations, suddenly they have a green light. And the reality is that all it takes is a 1% allocation from even a fraction of these groups to completely reshape Bitcoin's liquidity profile. The inflows are measured in the tens of billions, then the hundreds of billions, because these institutions, they do not dabble, they allocate serious money. And once one big allocator steps in, the others will start to pay attention. Nobody running a multi-billion-dollar portfolio wants to be the last person in the room who ignored the best performing asset of the century. A regulated on-ramp changes the entire market psychology going on here. This is going to create that competitive pressure, and it's going to force the chief investment officers everywhere to justify staying out of Bitcoin. This is simply the beginning of the institutional adoption era. If it wasn't obvious by the Bitcoin treasury boom, if it wasn't obvious with the government getting involved, well, it's obvious now. Bitcoin has become fully compatible with the largest pools of capital on Earth, and those pools do not move quietly. And I do want to talk about why regulatory framework matters on a practical level, because it's not just some government stamp here. This changes how the entire market functions. A CFTC regulated exchange operates with real rules, transparent order books, proper custodial standards, risk controls that actually work, clearinghouses that don't disappear in a puff of smoke, audits that aren't done by someone's cousin using Excel 2003. And that is exactly what the large institutions want. They don't mind volatility, they mind chaos. They want a market structure where the rails are sturdy, the oversight is serious, and the data is trustworthy. And this shift is very powerful because it upgrades Bitcoin's market infrastructure to the same level that the other commodities out there like gold and oil that they use. So when investors see that, they're going to stop viewing Bitcoin as some exotic financial experiment, and they're going to start seeing it as a standardized asset class with reliable guardrails, like Bitcoin, like the commodity that Bitcoin actually is. And one of the biggest friction points historically has always been custody risk. But now we're going to have federally regulated venues setting eligibility requirements for all of custodians, which means that the Wild West era of the trust us bro exchanges, they're going to get replaced by proper security and accountability. This boosts confidence for new participants, it boosts credibility with regulators, and it boosts the willingness of serious capital allocators to treat Bitcoin the same way that they treat every other institutional asset. So you can say that Bitcoin is getting regulatory clarity, but really Bitcoin is getting professional grade market environment. This is the point where everything comes together. Bitcoin is now sitting inside of a framework that the biggest financial institutions in the entire world that they actually understand. The US government has finally created a very clear path for participation. The excuses are gone, the uncertainty is gone, the waiting game is officially over. This changes the momentum of the entire asset. Retail adoption has obviously built the foundation of Bitcoin, but the institutional adoption is going to build the skyscraper on top of it. When the largest pools of capital on the planet are gaining access to an asset with a fixed supply and a global demand, the long-term direction is becoming very obvious. We are stepping into a cycle that is defined by maturity of an asset class rather than speculation. Bitcoin is transitioning from a curiosity into a core allocation of portfolios amongst the people with the most money in the world. Every single financial advisor, every fund manager, every treasury department is going to face the same question. What is our Bitcoin strategy? And the people who answer that question early will look very brilliant in very short order. This moment marks the beginning of a new phase of price discovery because it has to. A regulated, federally supervised spot market in the United States will deepen liquidity, it will deepen demand, and it will elevate Bitcoin's credibility worldwide. The groundwork is set, the infrastructure is ready, the policy environment is obviously shifting, and Bitcoin is positioned to absorb a level of capital that previous cycles couldn't even support. If you were waiting for the signal that a new macro trend has started, this is it. And if you want to position before this shift happens, do it the right way with Swan Private. Swan Private works with high net worth families, individuals, and companies building generational Bitcoin positions, building them securely, strategically, and with real macro insight. Because the goal isn't to trade this next spike, it is to own the foundation before the rotation finishes. Visit swan.com/no-second-best to learn more. Like this video and subscribe to Swan for more daily Bitcoin insights during the most incredible capital rotation event in the history of the world. My name is Adam Livingston. I am the Bitcoin Wizard. Have a terrific day. Do not party too hard. Class dismissed.